All right. Today is Tuesday, March 1st, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight. Boy, where do we start? It is getting ugly out there, not just in the market, but in the geopolitical arena, and it's getting scary, to be honest with you. Yet the financial markets right now are tied and glued to what's going on in the geopolitical arena. For example, today when we woke up in the morning, look at the indicators regarding the Russia-Ukraine war. Palladium was higher. Oil was up big. Wheat was limit up. It was surging higher to the point where they had to limit the trading. The VIX was up big. The RSX, the ruble was down. Gold was up big. So every single indicator was telling us that this is an ugly day in the equities market. They were all flashing bearish signals. Now, hear me out on my theory here. All of these, palladium, the VIX, oil, wheat, gold, they're getting severely overextended from a technical perspective, meaning overbought, quote unquote. Now, that doesn't mean that they will go down, but any hint of good news will indeed flush down all of these indicators. Palladium will go down, oil will go down, wheat, gold, you know the story. So, if you've been riding this, be it palladium, be it oil, be it wheat, be it gold, perhaps, I'm not saying abandon the trade, I'm saying perhaps you want to start buying puts and hedge your position or take some profits. Some of you might say, well, I don't trade the futures, I've been playing it via stocks. Now, all of you are big boys and girls, been watching this channel for a while. For example, if you're not trading palladium futures, you're following the trade via shorting the SMH, the semiconductor ETF. Because as palladium prices surge higher, you can see the inverse relationship clearly from the chart. The SMH has been going down. So if you've been buying and riding puts on the SMH, for example, perhaps it is time to take some profits and hedge a little bit. Now, you might say, Maverick, are you crazy with all what's going on in the world right now? Are you really expecting a glimpse of hope here? What are you seeing? Here's what I'm seeing, and I hope I'm right, because if I'm not, it's going to be a tragedy. Let me try and attempt to get into Putin's head, which is not an easy endeavor these days. But look at the map, the conflict right now. Heavy bombardment at Kharkiv, the second largest city in Ukraine. And we have a massive convoy that stretches all the way to 40 miles long. So obviously Putin is now bringing the big guns out. Now, this convoy stopped moving the last time I checked, stopped moving for now. It is not advancing toward the city of Kiev. What does that mean? If I'm reading the situation correctly, perhaps Putin is bombing one city, making an example, and he is sending another message saying, look at this convoy waiting. If that convoy indeed invades the city of Kiev, then this is a point of no return at all. It's going to be a massive massacre and all bets are off. And there will be no negotiations from that point on because it will be extremely horrific. So what I'm reading right now is perhaps Putin is waiting and giving the international community a chance to negotiate before he enters the city and the massacre happens. And I assume that there are some negotiations behind the scenes, specifically from China. The problem is, what does he want? Because he gave multiple reasons. Does he want to carve out certain territories out of Ukraine? Does he want the government to be toppled? Does he want certain groups to be prosecuted? We don't know. But the glimpse of hope right now is that this convoy stays still and we get a deal, whatever that deal might be, and the aggression stops. And if that happens, and hopefully it will, and we all should hope for that, because if it doesn't, it's going to be a point of no return in this conflict. So let's say the glimpse of hope works out and we have a deal. You're going to see a massive flush down in palladium, in oil, in wheat, in gold, in the VIX, the RSX, the Russian ETF, and the ruble will bounce significantly higher. And so will the equities market here in the United States. And therefore I say, perhaps it is time to book some profits and think about hedges. The trade remains hot for all of them, palladium, oil, wheat, gold, but hopefully we get a glimpse of hope and the aggression stops and we see a reversal here. Whether you're a bull, bear, doesn't matter. You gotta hope for that scenario to happen. But a reminder, the trouble for the equities market will not end with the Russia-Ukraine conflict ending. We have a lot of problems, primarily inflation, and as you can see, companies are struggling to raise cash via selling stocks. This is a bearish indicator that this market is stalling, and it is indeed in a bear market territory. So we'll take it one step at a time here. If the glimpse of hope happens, then we will see a rally in the equities market, and then we'll take it from there. We'll talk about this and a lot more in a minute, but here it is. In focus tonight. Revisit to the wall of worry. We start with the most active item in the wall of worry, Russia. Now, a lot of you want to buy the dip in the ruble and perhaps the RSX, expecting a bounce on this glimpse of hope. You cannot do this right now. It is just too risky. There is an extremely likely scenario that Russia will default on its debt, and this will produce a massive economic crisis in that particular country. We also have Russia swaps signaling a record 56% chance of default after sanctions. Now, these are worth a couple of $100 million, but you start with a credit swap and then you start moving into bonds, in corporate bonds, government bonds, and the defaults start to hit like dominoes. So the risk is simply too high for the Russian economy. With all of these sanctions, by the way, somehow the Russian oligarchs, the yachts, and private jets are still moving around despite the sanctions. So again, these sanctions so far have been absolutely useless, besides the fact that they're punishing the Russian economy and the Russian people specifically, not Putin and his oligarchs, that's for sure. Now, perhaps you're seeing cryptos rising higher, specifically Bitcoin, and the reason is we're seeing trading between cryptos and rubles surging significantly higher as the value of the ruble collapses. What does that mean? Now Bitcoin is also tied in this conflict. If we have a resolution and the ruble recovers, you will see Bitcoin diving down. So this is one risk you have to keep in mind if you're trading cryptos, specifically Bitcoin. Another impact of this conflict is on airlines. As you can see, the Europeans and Canada, and now, by the way, breaking news, even the US, have blocked Russian airplanes from flying over these territories. And of course, the Russians retaliated by banning American, Canadian, and European airlines from flying over Russian airspace. The impact of all of that will fall heavily on European airlines. So you're seeing a lot of weakness in airline stocks. Avoid them. A lot of trouble ahead. All of this maneuvering will require more jet fuel, meaning more expenses for airlines, and their balance sheets are already in a really bad shape. So avoid airlines for now until this conflict is resolved. Now, one thing I want to address about all of this conflict is there's a lot of crazy talk out there, social media and TV. You have all of these former generals and intelligence officers who've been jerking off to a war against Russia for years now. And they're doing crazy talk as if a nuclear war is a walk in the park. Bring it on, they say. And there is another camp in social media, these sheep, the lunatics, who say, oh, Putin is just bluffing, he will never use nuclear weapons. How do you know? How can you guarantee anything right now? If you say the guy is unhinged, then you cannot trust anything. You have to assume that he will indeed use nuclear weapons. For example, he's already moving and readying nuclear submarines and missiles to be deployed. And many insiders who are familiar and experts on Putin and the Kremlin are saying, yes, he would do it. He would use nukes. So this is not a joke anymore, folks. All of this tough talk in social media, you people have lost your collective minds completely. For all we know, this guy's losing his marbles. I mean, who sits this far social distancing from his own generals? It is absolutely insane. And look at the reaction, by the way, when he gave the order to ready nuclear weapons to be deployed. It is absolutely stunning. Take a look.
Приказываю министру обороны и начальнику генерального штаба перевести силы сдерживания российской армии в особый режим несения боевого дежурства.
I mean, look at these two guys. They're like, okay, did the big dog lose his mind, bro, or what? Should we do something about it, or are we gonna disappear? I mean, if his own generals are looking like this, yeah, this guy's unhinged. And he would do it. So enough with the stupid talk and social media and otherwise propping up for war against Russia. Talk to your father, to your grandfather generation who avoided war with Russia, nuclear war, over the Cuban Missile Crisis. Now we're going to go into a nuclear war with Russia over, Ukraine? I'm not trivializing the tragedy that's going on over there, but this doesn't merit a nuclear war. People need to wake up. It's not a game anymore. Back to the wall of worry, and perhaps the most important item for the market is the Federal Reserve and the monetary policy. We have two active items right now. One of them is bearish for the stock market. The other one is becoming bullish, which is the most important one, the Federal Reserve. And the reason is interest rate hike expectations are moving down. The problem though, sooner or later, we're going to have to face the same problem once again, whether we have the Russia-Ukraine conflict or not, because inflation is surging out of whack. You're seeing what's going on with crude oil prices, which we will talk about in the commodities coverage. Wheat, grains, food, lumber, metals. Everything is surging higher right now. Inflation is surging out of whack, which means the Fed has to be even more hawkish and perhaps increase interest rates by 50, if not more, basis points comes March. But they're not going to do that either way. We're going to settle to 25. This is good for the market right now, but the market as a mechanism looks forward and it sees that this is just kicking the can down the road before we have to be even more aggressive and slam on the brakes when it comes to the monetary policy. So either way, the outlook is extremely bearish, but don't underestimate the relief the market will feel if the Russia-Ukraine conflict is resolved and we settle to 25 basis points in March when it comes to the hikes. With that being said, we have alarming signs in the economy that perhaps we are already in stagflation in certain corners of this economy. For example, look at the Chicago PMI that we got yesterday, diving down big time. This is a slowdown in the pace of economic activities. The question is, are prices still lingering higher? Because if they are, then we have a stagflation problem in this economy. Here it is. All of the main 5 indicators fell, with new orders and supplier deliveries taking the largest hit. This is alarming. All the inventories edged up over the month. In February, production fell for the second consecutive month, dipping 5.2 points to 55.4, the lowest reading since August of 2020. Folks, we're starting to lose all of these gains that we've been building on since the thing hit back in 2020. And this should send a shiver down your spine because after printing trillions and trillions and trillions of dollars by the Fed, racking up the public debt of this country to over $30 trillion just to so-called rescue the economy. We're now losing all of these gains. So we have trillions of dollars flushed down the toilet just like that. And the only gainers from this cocaine operation of printing trillions of dollars to prop up the equities market are the rich, the insiders. Retail mom and pops are losing their money in the stock market. The economy is starting to lose its gains. So what is the point here? This has to be a valuable lesson for economists and historians that we should never, ever tackle any crisis with printing more money like we did during the pandemic. Never, never again, because it produced temporary gains, yet we're stuck with trillions and trillions of dollars in debt. Continuing, firms were seeing more orders unfilled due to material shortages. And listen to this. So much for we gotta print more money to create jobs. Employment dropped to 43.5 following January's recovery, fading 5.6 points to the lowest since October of 2020. Firms stated that the miracle mandates and seasonal factors were causing resignations. Yep, all of these useless mandates that did not do shit in stopping the spread, yet they cost the economy jobs. What a brilliant decision by our so-called leaders. New orders slowed to a 20-month low of 53, falling 12.3 points. Give me the Elmo with the fire, sound the alarm. The economy is slowing down dramatically, and you cannot pin it on the Pokemon variant now. This is February, folks, not January. So you're seeing the signs of stagflation already here. Inventories grew following last month's slowdown 2.5 points higher at 57.3 and 6.5 points stronger than the 12-month average. Firms continued stocking up due to persistent supply chain disruptions. Prices paid declined 2.5 points to an 11-month low of 86.5 in February. Some firms noted price gouging by suppliers, whilst others saw prices leveling off. So here's the glimpse of good news, that prices are also leveling off. But here's the problem: inflation expectations. This month, we asked firms by what percentage they see employment costs rising this year. Approximately half expect 4 to 6% increase, followed by 28% pricing 7 to 10% increase. 11% anticipated marginal increase of 1 to 3%, whilst an equal near 6% saw either no increase or an increase over 10%. Folks, here it is. Inflation expectations matter because they become a self-fulfilling prophecy. If they're expecting higher prices, then the suppliers will also increase prices. Meanwhile, the pace of economic activity is slowing down dramatically. Now, we have what you could say some good news when it comes to the economic activity. For example, in one of the hottest corners right now in this economy, the housing market, prices continue to surge out of whack, and therefore construction spending was stronger in January. It was up 1.3% versus the 0.1% estimate. You could say that this is good news for the economy. The problem is they're spending more. They're spending more because material costs are increasing. So once again, unless this spending is translated into more activities in the housing market, which is stalling right now due to the lack of inventory, but unless that happens, then we're seeing more spending, higher prices, yet we're not seeing economic activities, in this case, buying houses, because A, they're unaffordable, B, the inventory is nowhere to be found right now, and it's going to take months, if not years, before this inventory hits the market, and hence, stagflation is here. Another indicator that we got today is the ISM Manufacturing Index. It was stronger in February, slightly. New orders were higher, prices paid went a little down, inventories, production, supplier deliveries, all higher. The problem is backlogs are surging higher again. Here's the alarming signal. Just like we saw with the Chicago PMI, we're now seeing employment ticking down in the ISM Manufacturing Index. This is yet another sign that we're seeing inflation moving higher, yet the pace of economic activities is slowing down. In this case, employment. This has to be a wake-up call for the Federal Reserve because we're seeing signs of stagflation in this economy. Yet the Fed, the clueless madman Jerome Powell, continues to buy bonds, continues to buy mortgage-backed securities as we speak right now. It is unbelievable for these fools to be this callous about inflation. And here it is, the Atlanta GDP tracker is now pretty much at zero. It went from positive to negative, now to zero. Why did it perk higher from zero? Here's the answer. Interest rate hike expectations went down dramatically. The 50 basis points, poof, gone. We're now sticking to 25 basis points. And this is giving the GDP a little breathing room, not to dip into negative territory. The problem remains. We're not seeing growth in the GDP. We're seeing GDP stalling while prices moving higher, and hence stagflation. The Fed better wake up. They listened to us and they started taking action last year, let's say September, October, which was already too late, by the way. But let's say if they did that, by now they could have had some ammunition not to increase interest rates or even easing a little bit. But they're already too late, they're way behind the curve, and more crises continue to pile up, and the Fed continues to be way behind the game. Back to the wall for you. What about China? China's quiet for now. Nothing is happening, so we'll move on. What about the brothel? We have the State of the Union happening right now, so maybe some announcements will come out, we'll see. But what about the thing? Any update on the thing? Well, we have some updates. For example, California is lifting all restrictions, everything gone. Just like that, magic. Now that we have another boogeyman, they don't have to scapegoat the unjabbed anymore. But today, most importantly, we got data from Pfizer, and hence, you gotta avoid Pfizer. If you've been investing in Pfizer, you better get out because the bad news are piling in. We're getting data. The jabs for the very young were not effective at all. Look at the disgusting media, vilifying, attacking those who sounded the alarm, using facts and science to say that this will not be effective for kids. We should not even try to restrict them like this. And now what do you know? Here it is once again, we were right. And all what the media has to do with their disinformation is say, whoops, we got it wrong. Everybody gets it wrong once in a while. But if I get it wrong, or you get it wrong, we get banned right away. We get gagged right away. So again, the message is the jab optimism that pushed Pfizer and Moderna and other companies higher. This optimism is poof, gone now. Anyhow, folks, we're going to move on and cover the market information for you, and we start with the performance of indices today, and here we go. The Dow Industrial Average closed down by 597.65 points, or a decline of 1.76%. The Nasdaq also down by 218.94 points, or a decline of 1.95%. The S&P 500 down in the red by 67.68 points, or a decline of 1.55%. What about the sector's performance today? The leader of the day capturing the gold, the silver, and the bronze metals, energy, energy. The rest, shame on you. The laggards were led by financials, cyclicals, and industrials. What about the advance to decline ratios? NYSE 29% advancing versus 68% declining. The Nasdaq 32% advancing versus 64% declining. Moving on to commodities, look at that, glowing up green. This should make the Federal Reserve, Jerome Powell, shit his pants right away. You have a war. And oh, by the way, inflation continues to rise higher. Massive gains across the board. The WTI closed the day higher by 11%. Unbelievable. Brent closing the day a little over 9%. Gasoline up by 7% or more. Heating oil up almost 10%. Natural gas closing the day with gains of almost 4.5%. And stick around for the commodities news segment in a minute because we'll talk about the release, the strategic reserve, and so on and so forth. But here it is, softs. We have gains across the board with exception of OJ. OJ was flat, but the gains were led by sugar, cotton, lumber, coffee, cocoa, all moving higher, significantly so. Here we go, with inflation surging out of whack. What about metals? An upside day for gold, silver, platinum, copper, palladium, all moving higher. Now, of course, if we have an easing in the war, perhaps a resolution of some sort, you will see palladium, gold, silver diving down. Copper and platinum could hold for a little while. What about meats? A down day for feeder cattle futures. Likewise, live cattle was down, be it modestly. And here it is. The dip is over for the new big tech lean hogs, surging higher and closing the day with about 2.5% gains. Grains remains the hottest trade for the year, lighting up green across the board. Here comes food inflation. Not a big deal, right? Starvation. We could live with that. Anyways, the gain in grains were led by wheat, corn, soybean oil, oats, soybeans, rough rice, soybean meal, and lastly canola, closing the day with almost 1% gains. Here it is, commodities news. We start with energy. Today, unfortunately, once again, the Biden administration released about 60 million barrels, or I should say collectively, the US and other countries released 60 million barrels from the strategic reserve. The problem is, it didn't do shit. Matter of fact, if anything, that pushed the WTI and Brent to session highs. So once again, all of these releases mean nothing at all. You gotta start producing at home, and this will take a lot of time, and it remains challenging, by the way, because the shale oil industry is not coming back either way. It requires stopping the war on fossil fuels, stopping the green energy mania that's going on right now. Yes, we should transition to green energy, but the transition has to be gradual. Otherwise, you're destroying the shale oil industry in this country, and your only resort is to beg OPEC to produce more. Because what are these 60 million barrels going to do anyways? The daily consumption in this country alone in 2021 was around 20 million barrels per day. So the 60 million barrels, assuming that all of them go into US consumption, what is that going to cover? 3 days worth of consumption? This is a major problem. And therefore, you're seeing crude oil prices surging out of whack. They're not going to stop absent of a resolution in the Russia-Ukraine conflict. And oh, by the way, the Fed stopping the pressing machine, as Goldman Sachs said yesterday, crushing the demand via rising interest rates. There's another shoe that could drop here, which, what if the Russians retaliate against all of these sanctions by cutting the supply of oil and gas to European countries? It will be an epic disaster. You will see the German, the UK, the Polish economies dropping like a rock right away. Matter of fact, the German DAX will get crushed immediately. So this remains a wild card that Putin could play anytime, any minute right now. And as you can see, the shipping vessels arriving on time, the percentage went down significantly in 2021, and the assumption is in 2022, the number is even more abysmal, now that we have an ongoing war in a vast amount of land and territory in Europe. So the tailwinds for crude oil prices to continue to move higher are still intact. Matter of fact, we're seeing premiums for call options on oil rising higher, soaring to 2.5-year high. What does that mean? In essence, we're seeing more bets for higher oil prices. On the other hand, the implied volatility is surging higher. As I've explained to you in the intro of this video, any good news will crush crude oil prices by at least 10%. Any good news on the Russia-Ukraine front, that is. But it also tells you at some point, call options on crude going higher, the premiums will be too expensive. And that in itself could, keyword could, be a ceiling, at least on temporary basis, for the prices of crude. We talked about wheat futures, limit up, massive bid, underneath wheat, and the reason is, as I've explained to you in previous videos, almost a quarter of the global trade of grains comes from Russia and Ukraine combined. You cannot underestimate this kind of disruption to the global grain trade. It will be disruptive, it will push inflation higher, and the most alarming of all of this is we could see a starvation crisis in poor countries. Once again, thank you to the Federal Reserve and Jerome Powell, because I believe that Putin wouldn't have invaded absent of this massive inflation, which is a weapon for Putin to do whatever he wants to do. Moving on to the big casino, the options market. What's going on here? The volume is receding big time. This is not a good sign for the bulls because at some point somebody is going to buy calls, gotta buy calls. Otherwise, all of these rallies are mere bear market rallies that will fade right away. But for now, the hottest table in the casino today was Apple at around 850,000 contracts that traded today. About 57% of those were calls. And number 2, AMD with around 600,000 contracts traded today. About 63% of those were calls. All of this call options buying for AMD fired back today. The name was down big, almost 8% to the downside. Why? Because palladium prices surged higher. Tesla, the souffle, number 3, still the outperformer in the market, at least among the big caps. And here it is, the Tesla table was at around 500,000 contracts. About 56% of those were calls. Here are the unusual activities that took place in the options market today. We start with the ticker GLD. This is the gold ETF. They're making a massive bet here, buying the $200 calls for the expiration date March 25th, with expectations that the name could pop higher by more than 10% by then. They paid about 60 cents a piece to enter this trade, all in all spending about $1.7 million. What about the trade for the ticker TLT? This is for bonds on the 10-year yield, not really, but on the longer end of the yield curve. The 10-year yield was down big today. It was down for the wrong reasons. Not because inflation expectations went down, but it went down due to panic buying in the TLT because of the conflict between Russia and Ukraine. So somebody's betting for more gains here in the TLT. Maybe the TLT has been awakened for now. So they're buying the 149 calls for the expiration date March 18th, with the expectations that the name could pop higher by more than 5.5% by then. They paid about 80 cents a piece to enter this trade, all in all spending about $2 million. What about the trade for the ticker AXP, American Express? The name was down big today. The sanctions against Russia is impacting these financial names, specifically AXP, where we have restrictions in traveling, sanctions all over the place. A name like this will get hit hard. And today they're doubling down by buying the 150 puts for the expiration date, April 14th, with the expectations that the name could drop down by more than 16% by then. They paid about $2.65 a piece to enter this trade, all in all spending about $3.5 million. What about the trade for the ticker FEZ? This is the European ETF, very risky right now, so they're buying puts, expecting more downside. In this case, the 38 puts, and by the way, because the situation remains volatile, if Putin plays the card of cutting off oil and gas, then European stock markets will crash right away. On top of that, what if we start sanctioning Russian oil and gas? Either way, they're buying the 38 puts, the expiration date, May 20th, with the expectations that the name could drop down by more than 5% by then. They paid about $1.75 a piece to enter this trade, all in all spending about $2 million. Continuing with interesting trades, what about the ticker IGT for International Games? The name got clobbered today due to earnings, and they're betting for more downside to come by buying the 25 puts for the expiration date, April 14th, with the expectations that the name could drop down by more than 5% by then. They paid about $1.80 a piece to enter this trade, all in all spending about $1.2 million. And lastly, what about the trade for the ticker IWM for the Russell 2000 small caps? Interestingly, they're buying puts here, betting that the IWM will fade. If the IWM is a leading indicator, then the market in entirety will fade too. In this case, they're buying the 186 puts for the expiration date, April 14th, with the expectations that the name could drop down by more than 7% by then. They paid about $4.70 a piece to enter this trade, all in all spending about $2.8 million. Moving on to the heat map analysis. Look at this. A sea of red with some exceptions. The bulk of the pain was in financials. Folks, the sanctions are going to bite here at home too. There is no escape around it. Massive down day for banks. Look at JP Morgan. Of course, JP Morgan crashed today. It's been crashing for a while, losing all of the pandemic gains, perhaps because they cannot wash money, they cannot launder money anymore for the Russian oligarchs and the mob bosses. They got caught in the FinCEN revelations washing money for Russian oligarchs and mob bosses. So this is good news, at least for us, against the criminals at JP Morgan. Anyways, airlines are down. As we've talked before, Boeing is also down big because you have all of these shutdowns for airspace. No wonder why. Chips, due to the rise in palladium, some names are lighting up green. For example, Target, after earnings, when we look at the energy sector, I've been talking about the rotation from Exxon to Chevron. And so far, this has been an amazing trade, shifting from Exxon to Chevron. The reason why you want to shift from Exxon to Chevron, the upstream business, as oil prices continue to surge, becomes costly. The upstream meaning the initial stage of extracting oil from the ground. Exxon is concentrated in both upstream and downstream. Downstream means pretty much the later stages in the production, gas stations, etc. Chevron, on the other hand, is more concentrated in downstream, which becomes more profitable as oil prices surge out of whack. We saw the same phenomenon, by the way, back in 07-08 in the last inflation. We have more notable movers here. Let's dig down. For example, all of the liquor, beer, beverages names were down big. And the reason is we're seeing some boycotts here for what the consumer perceives as Russian vodka. Yet the reality is only 1% of what's drunk here in the US comes from Russia. We're also seeing more names pausing business with Russia, like Disney not releasing movies in Russia. And I say, what about China, Disney? China is the biggest human rights violator out there. Yet you're releasing your movies over there. Similar story with Apple. The hypocrisy. Let's hold product sales in Russia, but not in China. More notable movers in the automotives this time around. Lucid is down big. We're already delayed production. We knew about that due to the shortage of materials, but we have more details now. Even the so-called Gravity SUV that they've been jerking off to and propping up, well, that's not going to happen anytime soon. So Lucid is down big. Another name that you cannot see in the map because it's too small, that got absolutely crushed today. Down almost 40% was Good RX after earnings, missing revenues, and producing a weak forecast. Tesla continues to hold, and perhaps we have the identity of the so-called Tesla whale. I'm joking, of course, because Canada's largest pension bought Tesla. Whoops. Tesla's going to go down, folks, and now you have Canada's largest pension fund buying a name exactly at the top. More notable movers, Starbucks continues to be under pressure, and the reason is we have Senator Bernie Sanders who said Starbucks can afford to give baristas $5,000 bonuses. I don't know how that's going to happen, but anyways, and Starbucks is now retaliating and threatening all of these workers forming unions in its stores. This is a battlefield. You want to stay out. Fade Starbucks. By the way, on top of that, coffee futures continue to move higher. So say goodbye to Starbucks. When we zoom in the heat map, we have more notable movers in the defense contractors. But this time around, Raytheon and General Dynamics are not moving higher. We're seeing LMT, Lockheed Martin, and Northrop moving higher. And this is quite alarming. Maybe I'm reading too much into it, but Raytheon moves higher when we supply missiles to Ukraine, for example. But when LMT and NOC move higher, are we about to enforce a no-fly zone over Ukraine, which means pretty much a war against Russia? This is what I'm afraid of. What about materials? As you can see, gold is lining up green. So did copper, FCX, and Alcoa. Every dip in these names you want to buy right away because Alcoa was down under pressure for a few days now. But today it bounced higher, gaining a little over 5% for the day. Now, look at the fertilizer names. They're working out some overbought conditions on the technicals from a daily chart perspective. You want to let the air come out a little bit in these names, Mosaic, Corteva, Nutrien, but at some point you want to buy the dip because just like we saw with Alcoa, once the air comes out, the dip buyers are waiting on the sidelines to buy these kind of names. Moving on to the heat map analysis for the ETF heat map, the only thing lining up green here besides the inverse indices and VIX proxies, we have gold, GDX, GLD, even silver, SLV moving higher. We have energy also moving higher, but this is an important one, so pay attention now. The XOP is moving higher along with the XLE, but the OIH is down big today, almost 2.75% down. Why? Why are we seeing this contrast? As I've explained to you, OIH is more in the upstream, the XOP is more in the downstream. We want to be in downstream right now. Likewise, we have the XME for materials moving higher, but besides that, it's a bloodbath across the board, specifically for the Russian ETF. The pain could continue here for Russian ETFs because we're seeing all of these creators suspending, issuing new shares with these Russian ETFs, and for all you know, they could suspend trading entirely for all of them. Likewise, European indices getting whacked today. Matter of fact, the DAX was down nearly 4% for the day. So European equities for now is a no-go zone, absent for peace deal, a halt of the war in Europe. Moving on to the charts analysis, and we start with the 30-minute chart for the SPY, the S&P 500. Believe it or not, despite the down day, the odds remain split 50-50 between the bulls and the bears, because on one hand, the chart is still hugging the line in the sand at around 430 in what it appears to be a bull flag formation. So you cannot say that the bulls are dead here. Likewise, this chart had many chances to move higher. 434, 438, even 443. It didn't do so. Sooner or later, if the chart continues to consolidate, this is a reflection that perhaps there is a lack of buyers. There is hesitancy out there from buying right now, and time becomes more important than price at some point. If the buyers don't show up, the sellers will, and hence the bears are still here, waiting and waiting and waiting for a decisive close below 430, which will initiate a short trade in the SPY. Now, another point for the bulls looking at this chart is, look at the RSI. It was overbought. The chart worked out these overbought conditions in the RSI via consolidation, which is bullish, not bearish. Here's a daily chart for the continuous contract of the SPY. Again, it knocked at 4,384.5 and it failed once again. It's not quite the reversal yet, because the reversal will be confirmed if 4,232 is violated support, meaning a daily closing below that number. We will look at the volume. It remains at around average this time around for the seller's side. The momentum indicators are curling their way higher, but they're also facing struggles right now. This remains inconclusive. So you have certain points for the bulls, certain points for the bears. And of course, the bears are not going to initiate shorts until and unless 4,232 is gone. Because what the bulls are arguing for right now is, what if this is a formation of an ABC pattern? We formed the A leg, we are amidst forming the B leg, and then the chart captures support at around 4,232, and it forms the C leg higher all the way to at least 4,472. What about the Qs? 30 minutes chart. Similar story here. The bulls have points, the bears also have points. The bulls would argue, look here, we're still holding at the line in the sand at 343. Yes, we closed below by a little bit, but we're still hugging the line in a bull flag consolidation pattern. On top of that, the overbought conditions on the RSI are now gone. So the bulls are saying, we're just gathering energy right now before the buyers show up. We pop higher and we recapture 352 as support. The bears would counter and say, hey, you had your chances. Look at the 5 minutes chart. You are struggling right now. Bulls, you're struggling to hold on at 343, meaning the buyers are not showing up. What are they waiting for? The sellers will, and soon enough will go down and close the day below 334, and this will initiate more shorting and more selling. Here's a daily chart for the continuous contract for the NASDAQ, the Qs. The good news for the bulls is the fact that the support of 14,000 remains intact. The selling today was at a lower volume than the buying volume in the last 2 days, and the momentum indicators are curling their way higher. The bulls would also argue that the bears had their ABC pattern. Now it is our turn to have the ABC pattern, which means we formed the A leg, perhaps we're going to form the B leg all the way down to 13,600, and then we form the C leg higher all the way to 15,000. The bears would counter and say the fundamentals are not supportive. Sooner or later, you're going to lose 13,600 of support, or we're going to come down attacking. So for now, in this chart, the bulls have a slight advantage. What about the IWM 30 minutes chart? Again, look at the RSI. This is a point for the bulls, by the way. They worked out the overbought conditions on the RSI entirely, not by collapsing, not by gapping and crapping, but by consolidating between a range. 196.5 as support, 204.5 as resistance. The assumption for now is the buyers better show up. We have the State of the Union going on. Perhaps we will have some ceasefire in Russia-Ukraine. That happens, this bull flag pattern will play out, and we will see 204.5 as support once again. The problem is, if that doesn't happen, then time becomes more important than price, meaning the sellers show up instead. The confirmation will be losing the support of 196.5. What about the Dixie, the dollar index? Popping higher again, the ruble is crashing. Another down day for the ruble, but look at the dollar index. The momentum indicators are curling higher. They're getting closer and closer to overbought territory. Grab your tinfoil hats and hear me out. There is a theory out there that says the charts explain the news, or the charts precede the news, meaning the chart predicts what's about to happen. We will look at palladium, gold, oil, and all of these indicators. They're getting overbought. One of the indicators, not on the list, but it is an indicator because it comes hand in hand with the ruble, is the US dollar. It is also becoming overbought. So could it be that all of these indicators become overbought and then the charts explain the events, and the events in this case would be a ceasefire between Russia and Ukraine, and here we go, the dollar goes down, ruble blasts higher, the Russian ETF blasts higher, gold goes down, wheat goes down, palladium goes down, oil goes down. I'm just floating it out there. And here it is, the chart of gold, daily chart. It is now trading above 1,925, a critical level, and it wants to challenge the previous high at around 1,965. The problem is, once again, it is becoming overbought on the RSI and MACD. Any good news on the Russia-Ukraine front will drop this chart big time, and that dip at some point will become worthy of buying once again. Here's the 10-year yield, the daily chart, a massive flush down, yet it caught support at around 1.7%. Did the 10-year yield go down for the good reasons or the bad reasons from an equities perspective? In other words, did the TLT pop higher today for the good reasons or the bad reasons for equities? The answer is clear. The TLT was higher, NASDAQ was down. These two have a high degree of correlation. Not today. What does that mean? The 10-year yield went down for the bad reasons. Not because inflation expectations are cooling off, but because we have panic buying in bonds due to the conflict. So, what will happen here is if we have a ceasefire between Russia and Ukraine, the 10-year yield will pop higher significantly, perhaps recapturing 1.94 as support once again, and hand in hand, the NASDAQ, the equities market will also rally higher. It's a complex relationship, but you learn it by experience. You're watching this channel for a while, you're already catching up. What about the TLT? Here it is, a weekly chart popping higher, capturing 140 as support. You look at the RSI and the MACD, they're all curling higher, perhaps in the process of reversing the negative divergences. If that happens, the TLT in no time will retest 149 as support, and perhaps hand in hand, yields will go down to retest the 1.5 threshold. Here's a 4 hours chart for the VIX. Once again, indecisive. Yes, the bears scored big. It is now above 33. The MACD indicator is showing green impressions on the histogram, but look at the divergence between the white and blue lines, the average. It is extremely narrow. What does that mean? Any drop in the VIX could erase these green impressions on the histogram. So the break is not that decisive. Yes, we're above 33, but look at the closing candle. Who's to say that this is not a reverse ABC pattern in the VIX, and soon enough we'll be down to 20. And if that happens, it will happen for a reason, and the reason is a ceasefire in Russia-Ukraine. Absent of that, if today, for example, we see another pop and a confirmation that 33 is support, solid support for now, then the bears will have their day. Here it is, the VXN 4 hours chart. Again, look at the MACD indicator, showing baby green impressions on the histogram, meaning indecisive. It is not popping higher yet. I have a hunch that any good news will flush this one down. So for now, we have indecisiveness. The bears moved a little higher in the chart of the VXN, but they have yet to challenge the highs at around 40. The bulls have yet to drop this chart below 27.5. So we remain in neutral territory, meaning you could eat pies in the face all day long. And hence, maybe you want to wait in the sidelines until we have a conclusion in these charts. Here's a daily chart for Apple. What's going on here? It retested the upper trend line of the channel, and it got rejected for now. Not a decisive rejection yet because the chart has yet to reverse the previous 2 days worth of candles. So for now, who's to say that this is not consolidation below the upper line of the channel, forming a bull flag formation before we see a pop higher? I'm just reading the tea leaves for you, but if Apple reverses again and it closes the day below the 3 candles, meaning below the lows of these 3 candles, then we have a reversal signal once again as Apple goes. So will the market. What about Tesla, the souffle hourly chart? Again, the bull flag magically, of course, worked out with a little pop higher. But as I've explained to you in yesterday's video, the difference between this bull flag and the previous bull flag is the fact that the RSI is right now at overbought territory. And oh, by the way, if you look at the hourly chart, we had a reversal and a formation of a bear flag. As the market was trending down, Tesla was trending higher. Could we see the opposite picture right now with equities moving higher, Tesla moving down? This is at least what the bears are bidding on. Or maybe Tesla whale is bidding on. After scoring big with the calls, now he wants to score with the puts. Look at the MACD, it's about to cross the negative territory. And by the way, we have some headlines here with the involvement of Tesla in the Russia-Ukraine conflict. Elon better be careful, but here it is first. Let's talk about this. And I don't know if these journalists are high or whatever when they write these headlines and these articles. The headline reads, Tesla offering free charging near Ukraine to help evacuees. So if you are in Ukraine and you have a souffle, Tesla's going to charge your car free of charge so you can escape Ukraine. Here's the problem. You look at the map, there are no stations in Ukraine. So you have to drive your souffle to Germany first or Poland, charge your car, go back to Ukraine, and then escape Ukraine again back to Poland or Germany. Wow. What a genius. But here's another problem with the souffle Elon Musk in the Russia-Ukraine conflict. Elon Musk needs Russia. He needs the nickel reserves, the palladium reserves, the lithium reserves of Russia. But now he's siding with Ukraine by providing internet. And of course, we're all supportive of that because the people of Ukraine need all the support they can get right now. But what if this sours Elon Musk's relationship with Russia? Something to think about. What about tulips? BTC, what's going on here? Continues to move higher. We talked about the tailwinds, Russians using Bitcoin now. The problem is, what if we're facing a triple top right now? Not buying it until I see it close above the triple top. And the problem is, if we have a resolution in the Russia-Ukraine front, Bitcoin will go down. Equities will go higher. So I'm just watching here. An observer. What about AMC, an hourly chart? Again, we're waiting for the third shot at 21. The problem is, did the chart form a bear flag formation from an hourly chart perspective? It remains small, insignificant, because what if this a process of gathering energy, which is bullish by the way, before AMC finds the buyers and shoot up higher above 21? Waiting to see when will that happen. And lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have an important ADP report, and then we have a bunch of Fed zombies speaking, Evans from Chicago, most importantly, James Bullard from St. Louis, and oh, by the way, the big dog, Jay Powell, is also testifying tomorrow. So it's going to be an eventful day. We have the Russia-Ukraine, we have all of these Fed zombies speaking, we have the ADP, by the way, we have the Beige Book, busy. So folks, buckle up your seatbelts, but for now, this is all I got for you. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.